All right, happy Friday, everybody. We're back in the Friday groove, so you know what that means. We got some CPA prep to talk about, but first, let's talk about Theranos and what's going on in Bad Blood. So you had to read chapters 16 and 17, I believe, or maybe it's 15 and 16. Sorry, 15 and 16. Chapter 15 was a pretty blah chapter. It just talked about the investments and how a lot of investment companies were getting interested in Theranos because their market valuation is getting higher. There's the son of Don Lucas who had his own investment firm, and he contacted a buddy and said, "Hey, I think now's the time to pull the trigger on this." Is that, wait a minute, didn't we interview the same company like 8 years ago? I said, yeah, they didn't have their act together back then, but they do now. So we're getting on the ground floor. And so they actually had a pretty significant investment. And they're really, really excited about the hype surrounding Theranos because, well, their devices are being used in the U.S. military, as we well will know. And they have the tendency to disrupt. There was also the article in the Wall Street Journal, which is kind of a precursor because John Carreyrou, the author of the book, who's going to be kind of the central character in the book later on, the author is a reporter from the Wall Street Journal, but on a different part of it, and they'll talk a little bit about that. But the Wall Street Journal article was kind of a fluff piece, just kind of said, yeah, this company is going to change the world, and obviously everything that Elizabeth Holmes could want. And then we were introduced to a couple new characters, Tyler Schultz and Eric Chung, and they came in and they were really excited about the prospect. In fact, Tyler changed his major just so because he was so excited about the prospect of working there. He was mechanical engineering and changed over to biology. And he's so excited at the prospect of working at Theranos. And I don't know, it's one thing to be idealistic, but if you have an idea of what it is you want to do with your life, I don't know that I would go so far as to change my major just to go work at a company, especially if like I had the experience that Tyler had at his company. So started out and he was very enthusiastic, and the very first day there, one of the higher ups just left the company, fired, and then some more people got fired, and then Elizabeth Holmes gave an inspiring speech, and he was like, yeah, go team. And then all of these problems happened. So there was a whole bunch of stuff going on. And they talked a little bit about what was going on with the testing and the blood testing procedures and how the Edison was working then. So did anybody kind of catch the procedures that they were using? They were basically taking 6 measurements and taking kind of not the average, but the median of the measurements and using that as a. And I don't know anything about medical field testing, but statistical analysis of that nature, that seems suspect to me, especially when the list seems to have such a wide dispersion of results. And obviously, there were some problems with it because even if that was a valid method, it didn't always work. So there was this story about Eric working over Thanksgiving, I think it was, and she got a call in and everybody was gone and she couldn't get the machine to calibrate. And so somebody from R&D came down and basically tossed out the outliers of the measurements of 12 measurements and then said the machine is calibrated and then ran it till the sample. So a lot of suspect activity. Tyler basically says, you know what, I think there's a problem here. I've got issues with this. I'm going to go talk to my grandfather. Grandfather reaches out to Elizabeth and says, hey, my grandson's got problems. And Elizabeth's like, that's okay, we'll answer the problems. And Sonny jumps in and answers an email and just basically kind of tears Tyler apart. Tyler says, I quit. And then Elizabeth is on the vendetta trail saying, oh, if you're trying to bring me down, I'm going to take you down first. It seems like a common theme for Elizabeth. It's just, when the threat comes up that she's going to tear it down. And so, I don't know. That just kind of seems, that would seem ominous to me, especially if you've got the kind of firepower that Theranos appears to have now with their board of directors and their super high-powered lawyer who's got national and worldwide acclaim. That's where we're at right now. So how can we actually stop this machine that keeps inevitably moving forward and doesn't appear to actually do anything, but it's worth a whole lot of money? Actually, if you think about it, it's kind of the dream, don't you think? So that just to have a business like that, it's like you don't actually provide anything, but people are willing to give you money because they believe you provide anything. It's like Las Vegas, but without the downside. So we're seeing the dream probably will not last. Okay, that was the fun part. So now we're going to be into the less fun part. We're going to be talking about multiple choice questions and CBS questions. So the good news is most of this stuff should be still very straightforward. So technically speaking, I think we're in what would be the end of module 3 of Becker. And so we've still got a few more weeks where we're going to be doing stuff that seems familiar. Once we get to the last 3 sessions, there's going to be a lot of discussion of attestation and assurance. which you should have some vague passing remembrance of because of 417, but it's going to seem very, very uncertain. So hold on to these moments while we can, because we're about to go into areas that are uncharted in a little bit. The good news is that we've actually got some assignments in this class that will reinforce some of the things that we already know. So I've been working on that. All right, in auditing accounts receivable, the negative form of confirmation request is most likely used. It would be used when what? So let's talk about the negative form. So we have positive form and negative form. What does positive form do? Positive form is saying, look, I don't care if the number that we sent you is right or if it's wrong. Please reply no matter what. Okay. The negative form says, look at this confirmation. If the number is right, you can ignore it. If the number is wrong, then we need to know about it. Which one of those provides the highest level of assurance? Positive form of confirmation. Okay, the positive form of confirmation, which means that logically speaking, if we're going to use the negative form of confirmation, we need less information, less detail, less assurance. Okay, is everybody on board with that? Okay, so let's go ahead and go through the answers. Total amount, recorded amount of accounts receivable is material. The financial statement was taken as a whole. That's actually, we would not even do testing if that was the case. So we can toss out A. Response rate in prior years, probably designed positive confirmations requests were inadequate. So if positive confirmations were not effective in previous years, that is not going to say that something we need less assurance on. We're probably a little bit more dicey. It would be have to do more thorough positive confirmation procedures. So B would be a situation where we want more assurance rather than less. So B is not our answer. C, recipients are likely to return positive confirmations requests without verifying the accuracy of the information. Keep in mind, if we're going to be using negative confirmations, we would like to have a large assumption that people are going to look at the detail. Okay. Because remember, the reason negative confirmations provide less assurance is the possibility somebody could receive the confirmation and immediately toss it in the trash bin. So we want to make sure that consideration is high, and this is the opposite. So we have D's left. The combined assessed risk of inherent risk and control risk relative to accounts receivable is low. Okay. So risk of material misstatement is low. So how much assurance do we need for risk of material misstatement is low? Not a whole lot, which kind of aligns with our philosophy that we can use negative confirmations in this scenario. So D is our answer. An auditor would consider a cashier's job description contain compatible duties of cashiers who receive remittances from the mailroom and also prepares the what. So if you're receiving remittances from the mailroom, you're the one who's actually getting the cash, okay, getting the hands on the cash. Which three aspects of which one of the three responsibility areas do you have? Custody, authorization, or recording? Custody. So you actually got custody of the cash. So we would like to make sure that that chain of custody doesn't get broken, at least not until it goes where? Where does cash go eventually? Where's the whole goal of cash? Well, it's going to be used to pay for other stuff. You're right. Okay, that's absolutely right. But we want to get it out of the cashier's hands into the hands of another party. What is that party generally going to be? The bank. Yes, it's going to go to the bank. Okay, so the cashier should basically have the custody of that item and should not go to anywhere else until it goes to the bank. So when you go to the bank, what do you usually have to fill out to put money in the bank? Nothing. We just hand our driver's license over and they take our money now. It's a very trustworthy process. It actually is. It actually is. But if we're talking about a large organization, we probably want to have documentation of what goes to the bank. What would be that documentation? The daily deposit slip? The daily deposit slip. Yes, the daily deposit slip. That's going to be the item that we're looking for right there. All right. In assessing control risk for purchases, an auditor vouches sample of entries in the voucher register to supporting documents. So are they using vouching correctly here? The interesting thing is the CPA exam in Becker, they use correctly all the time, but do they ever use vouching incorrectly? I haven't ever seen them use vouching incorrectly. So this one appears to be vouching incorrectly. Okay, or use vouching correctly. Which assertion was this test of controls most likely to support? And you can know because we're actually talking about items in their voucher that go into supporting documents. So we're going from record to source. So we're going down. Question is, I know you all have studied this. Let's see if you remember it. Which assertion is vouching? Existence occurrence. Everybody agree? Anybody gonna fight that one? So possibility Lotus is wrong here. Come on, anybody gonna raise a hand in defense? Okay, Lotus, you're absolutely right. Okay, you're absolutely right. Okay, so it's existence occurrence, B. Okay, all right. I'm just trying to keep you all on your toes because you're sitting down. All right. And in these internal controls for every check request, control requires for every check request there be an approved voucher supported by a pre-numbered purchase order and a pre-numbered receiver report. Determine whether checks are being issued for unauthorized expenditures. Auditor most likely select items from testing population of all what? So this is an interesting question, okay? So checks are being issued for unauthorized expenditures. So there's being payment payment made for expenditures. So the payment takes place, but there's no actually supporting transaction for it. So we've got an existence occurrence violation. So if we're going to be talking about this for existence occurrence, remember existence occurrence is going to be vouching, we top to bottom, all right? So if we're talking about the population that we're going to start with, it's probably going to be some sort of recorded item, okay? What would be the recorded item for payments? Or what would be a population of recorded items for payments? Purchase orders? Purchase orders is a source document. Canceled checks, what do you guys think about that? Canceled checks sounds good to me. Let's take a look at the rest. Receiving reports, that's a source document. Approved vouchers is a possibility, but remember, approved vouchers occur before the payment actually takes place. The final recorded item is going to be those canceled checks, which is going to be our recording, are basically anything that's in the record. And now we're going to start with that and move down to the original source documents. So canceled checks is going to be our item there. That was an interesting question. It's a good question to test your knowledge of that particular item. Which of the following internal controls would most likely reduce the risk of diversion of customer seats by entities employees? So remember back in our situation in question number 2, we've got somebody at the organization who is working in the mailroom and they receive remittance advices. So they receive the cash, and it's a possibility that that individual could just take the cash and put it in their pocket and say, I never received the remittance, all right? Is that a possibility? Sure, okay. So what is an easy way to divert that? Could we say that it's possible that we can have our customers send the money directly to the bank? Would that be a possibility? What is that type of system called? A bank lockbox system. That is a bank lockbox system. So sending money directly to the bank, that's a bank lockbox. Again, that's not the type of lockbox that the concessions people use when they do the sporting events at out there, the DSP folk, I think they use, but that's not the type of lockbox we're talking about. We're talking about a secure electronic lockbox for transactions to go directly to the bank instead of the organization. Okay. Auditor generally tests segregation of duties related to inventory by what? All right, this one is one of my favorite types of questions to ask because this is a question that relates to what is going to be the process that we use for testing a particular control. Remember, according to our control sequence, we have to actually have controls that are relevant to the risk and the management assertion that's being tested. And our tests of controls as auditors have to be relevant to the control there. I can't tell you how many times I've asked on exams and say, how would you test segregation of duties? And people have said, I would inspect records and documents. And then I follow up and say, which records and documents would you inspect? And they'd say, segregation of duties records and documents, Dr. Barnes. And I say, all right, so there are accounting records out there in many organizations that talk about how segregation of duties occurs on a daily basis. And everybody stands firm and says, yes, that's the case, okay? So everybody see that I'm making fun of this whole point, this whole idea, okay? You have to be very, very clear on what it is that you would do to test segregation of duties. And segregation of duties is a process, okay? It's a process by which an organization separates out 3 responsibility areas: custody of transactions, authorization of transactions, and recording of transactions. If you were to actually try to make sure that you were responsible for testing the control and you wanted to make sure that this process was working in an organization, what would be your very first step to actually do that? Go and see if it's working. So let's say I do the audit of DSP, okay, and I'm trying to see is DSP have segregation duties in place, okay? What am I going to do? I'm going to go and I'm going to talk to Jack, because Jack's the current VP of finance for there. I would say, Jack, tell me about segregation duties. And say, Dr. Barnes, we're a school organization. We don't actually have those things in place. I said, okay, just humor me and tell me about it. What am I doing if I'm talking to Jack? Inquiry, okay? And then can I actually see the process in place? Can I see how the items are filed and see that those items are separated? Yes. What is that? Observation. Does that make intuitive sense as to how that would be a test of that particular control? Yes. So personal inquiry and observation. Now, it's important to note, you may say, Dr. Barnes, I really don't like that answer because these are low reliability tests. And you're absolutely right. That's fair, okay? We would probably have to confirm or corroborate these tests with some sort of reperformance test to make sure that segregation duties are following the proper steps. But of the answers that are given here, these are the only ones that make sense because these are the only ones that are test of controls that are aligned with the control that we're trying to identify. Test counts and cutoff procedures, what is it we're counting? Okay, what is it we're trying to cut off? Those don't either make sense. Analytic procedures don't take place during test of controls. Invoice recomputation, okay, that's evaluation, allocation, accuracy concern. Document inspection and reconciliation, what documents, what are we trying to reconcile? Again, we're looking at a process, so our tests need to actually involve evaluation of that process. So that's why I like this question right here. Which of the following procedures would generally not be performed during audit of investment transactions? Okay, so this one's an interesting question in the fact that you have to go through all the answers. It seems like everything is okay up until the very end. You'll see why here in just a second. Examining the financial statements of the investee. All right, so the company that your client's invested in, would it be fair for you as the auditor to actually look at the financial statements to see if it were worthwhile investments? It's not something I would have picked off the top of my head, but I think that probably is reasonable, okay? That might be an answer, but let's keep moving on. Requesting a confirmation from a third-party custodian of any securities owned by the company. Do we know confirmations can exist for investments? They certainly can, okay? We talked about that back in 417. Comparing the reported values of investments to the published prices of the same or similar investments. Yeah, that's especially a valuable one. If we have especially if the investment has a market for it, we can actually determine that the holding price is what the market price is. So A, B, and C all seem reasonable. Let's look at D. Requesting that all securities be sold a year in order to determine the fair value of market securities at the time. So imagine that your auditor and say, you know what, I want to make sure that your investments are being held correctly. So sell all of your investments right now. How do you think your client's going to respond to that? They say you're a loony. Yeah, that's basically what they're going to say. Okay. So this one's one that if you read through all the answers and got to D, you should, like if you just got really bored and you only got to C, says, I'm just going to circle A because I'm tired. Okay. You kind of missed out because D was the payoff here. D is obviously. All right. An auditor is performing preliminary assessment of large clients' internal controls over payroll. Auditor will identify which of the following is an improper segregation duties related to the payroll function. Okay. So let's just go ahead and go through these. Each employee's weekly time card must be approved by the immediate supervisor. Okay. So there's an authorization step here. Is there any overlapping step in this one? Doesn't appear so. I think this is a pretty reasonable step. Okay. This is pretty reasonable. While the majority of payroll checks are direct deposits, all manual checks are handed out on a weekly basis by the paymaster. So checks that should be handed out, the person who has custody over them is the person who has custody over them. So can we say that that's okay? Yeah, that's fine. All blank checks in the check and signature plate are maintained by the human resources. Okay. So here's an interesting one. Blank checks would be an asset, okay, because you can actually generate value from them. Okay. The only thing that prevents them from being a bearer asset is the fact that they are not signed. All right. So the signature itself is an authorization step. So we've got custody and authorization that's being held by the same individual. Is that a problem? That is certainly a problem. C is going to be our answer, but let's look at D. Payroll department calculates a weekly salary distribution based on information received and prepares unsigned change with forward to the treasurer for approval. Okay, so yeah, they're actually going through the recording process and they're sending to a separate party so they can actually have the approval step. There is a separation of duties inherent in this particular answer. So D is fine. So C is our answer. How do we do, guys? 100%? 50%? 12%? All right. Keep seeing head shaking and I have to keep going lower and lower. All right. All right. Let's get into the task-based simulation. All right. Smith, the senior associate in charge of Raymond's manufacturing, observed the client's inventory count held on the last day of the company's fiscal year, August 31st, year one. Smith identified some differences in quantity items of the count and quantity recorded in the client's inventory listing. So complete the task by using the information right in the exhibits above. I'm sorry, I guess it's the exhibits below. I just copied and pasted this from Becker AM, obviously. For each of the variants identified, select the option listed to provide the auditor most likely response. The response may be used once, more than once, or not at all. All right, so this one's an interesting one for a couple reasons. I think the task itself is pretty easy, but you noticed that this is the order that they actually presented in, and then they don't present that same order on the next one. You actually have to look around for some of these items because they're not presented in consistent order, which I'm not going to say that they're deliberately trying to mess with you, but it would be nice if they would just retain sequence throughout the exhibits, wouldn't it? All right. We have an MDF panel, okay, MDF panel. So the MDF panel has a client inventory listing of 484. And it looks like our count says it was 434, all right? So what does it say on here? So this is the ADU 6123. Inventory in transit shipped FOB shipping point received September 2nd, year one, okay? So again, these are a series of purchases, okay? These are a series of purchases. And basically what it's saying here is that the client, our audit client, has not yet received these goods, but they should have included on their inventory because it's FOB shipping point. So FOB shipping point says what? When it leaves the docks, the ownership is in the hands of the buying party. Since our client is the one who's buying these goods, they actually have ownership at the moment that it left the vendor's docks, okay? So these items are going to be, this difference right here, this is what we counted. This is what the client says they have. So there's 50 items on a truck somewhere that were supposed to be, that were being shipped at the time that the auditor performed their test count. So how do we actually validate that that's the case, okay? What do you guys think? We got some options here. So expect supporting purchase documents for proper shipping terms, receiving information to verify exclusion or inclusion from inventory. Inclusion in inventory, not exclusion from inventory. Good, yeah. All right, moving on. Here's the pegboard panel. So the pegboard panel got an account of 11,222, but it's 11,000 down here. So HJ 0990. So inventory sold to customer FOB destination not yet received by the customer. So we have the opposite problem here. This is actually being sent to a customer, okay? Some goods were sent to a customer, but the customer has not yet received it. It's still on a truck. And the terms of this transaction were FOB destination. So it has to reach the customer's dock before the customer takes custody of it. So basically the same thing, except an opposite situation, except we're dealing with a sale instead of a purchase, okay? Sale instead of a purchase. So let's see. Inspect supporting sale and shipment documentation for proper shipping terms for exclusion or inclusion in inventory. Yeah, inclusion, because we do need to make sure that that was properly included in the inventory count because it's still on the truck. All right, does everybody see the difference between those two right there? Understand the difference? FOB shipping point and FOB destination, pretty key to understanding there. All right, sanded plywood, CO8013, 203 items according to the count. Sanded plywood, 150, is that correct? 64, no, sorry, 8013, whoops, 8013, 197, yeah, 197. All right, so 6 items of sanded plywood. So payments are made in advance for items received September 2nd, year 1. So basically, we've got payments made in advance, and when the payment is made, that we, our client is basically saying, we've already paid for these goods, we are now the owner of them. Is that a reasonable assumption? They've made the payment, they actually can recognize ownership? Yeah, it seems pretty reasonable. Do we need to test that assumption? Yes. Okay, how do we do that? Got good news for you. It's exactly the same as what we just did up here. And expect the supporting purchase documents to validate inclusion. All right, sheathing plywood. By the way, what's the difference between sanded plywood and sheathing plywood? It's not a rhetorical question. I honestly don't know the difference. I'm assuming somebody who's a little bit handyman is an understanding of this. Okay, that's going to be a weekend homework assignment, that understanding the difference between sanded plywood and sheathed plywood. Okay, it's going to be worth a lot of points too. All right, sheathed plywood, sheathing plywood, 786 items. Okay, and we have 800 items. Okay, so we have more in the auditor's test count than what is on record. So CO8012, the inventory was received on August 31st, year 1, vendor shipment receipt not recorded. Okay, so what does this sound like? Does it sound like that the client made a mistake here? Yeah, so they did receive the goods. It's on the dock. Okay, it was recorded. All right. We as auditors counted that, but the client has not included in their inventory listing yet. So they have not recorded something that has been received. What's a simple solution to that particular problem?
Request they make the appropriate correction.
Yep, they need to make a correcting entry, an adjusting entry. They record that item because they should have actually recorded this. They did not record it. So we're going to say, hey, record this. You're violating completeness right now. That's what Dr. Barnes told me. All right. Strand board. Strand board has 663 here and I think 600 right here. So what's the reason behind this? All right. Inventory separated for September 1st sale, held on the dock for customer pickup. So basically, the audited account, they counted everything that was in the warehouse, but there were 63 pieces of strand board that were sitting on the shipping dock, and they were being separated for customer shipment. Now the question is the customer already receive it? So it looks like sell to the September 1st sale. So yeah, we would actually assume that they've already customer picked it up. So we would need to verify, was that properly set up? Was that properly set aside for the customer sale? how do we actually validate that? If this was set aside for a customer sale, what evidence would we have of a customer sale? Supporting documentation, the customer receipt, or like a shipping document, and the invoice that actually went to the customer for the 63 items, the items that were on the dock. Yeah. So interesting thing is this is going to be or shipping documentation to verify inclusion in inventory count. Okay. Because keep in mind that our client had kept that in the client's or had kept that in their inventory, but it was sitting in a different part of the building or a different, like the shipping dock is sitting in a different part of the warehouse. We as auditors did not count it, but the client correctly included that inventory because it had not yet gone to the customer. All right, last item, underlayment. MO 6403, 127 and 150. So the auditor's test count was higher than the client reported. So what was the deal? The auditor or the client said, look, 23 of these items, the difference between 127 and 150, they're damaged and we're going to return them to the vendor. So if they're damaged, should they be included in inventory? Presumably not, because they're going to be returned for some sort of credit. So how do we actually verify that's going to be the case? Well, we know that they're going to be returned, so we probably could look at return documentation. So review return shipment documentation, and we're going to verify exclusion or inclusion from the inventory count. Exclusion from the inventory count, because remember the client has a lower number than we have as our test count, so we want to verify the exclusion is proper. All right. Yeah, this was kind of a tedious exercise, but I think this is a really good activity to understand what it is that we would do if we come into an exception and what our steps are. So I really like this activity. Don't be surprised if we see variation of this in the future as well. All right, we're done for today. Have a good weekend. See you all on Monday.